Hello and welcome to the Small Business Briefing. I'm Brian Kelly, CEO of the Small Business Association of Michigan.
Hi, everyone. Good afternoon, and thanks for tuning in today. I'm Sarah Miller, Vice President of Operations, and I want to start off by welcoming one of our newest members. That's Stevensville Electric. So thanks for joining. All right, Brian, let's get into the topics today, starting off with the latest results from the Michigan Future Business Index survey. This is a quarterly survey, and so these are the last quarter, fourth quarter of 2025 findings, and some of them are concerning.
Yeah, and it fits the sentiment that we have been picking up, especially since fourth quarter of last year from members. So this the Michigan Future Business Index is a survey that's been around for a long time, so you can compare it easily to previous findings. And so about 25% of the respondents, which are small and mid-sized businesses, um, reported increased sales over the last 6 months. That is an all-time low. Okay, 25% is an all-time low in the survey. 17%, 17% reported an increase in capital investment over the last 6 months, also an all-time low. So what it says is that fewer are experiencing increases and fewer are making investments in the future, which would be a sign of lack of confidence. The other thing is also rising costs of all sorts, but really zeroing in on healthcare costs. This survey says 7 in 10 businesses are expecting healthcare costs to rise in the next 6 months, with nearly one-third anticipating significant increases. And this is, of course, year over year, given what has been experienced in the last few years. And all of this kind of points to the same sentiment that anecdotally we've been picking up on, but also in our own surveys, um, just across the board. Just there's a lot more negative indicators out there today than what we've seen before. We've seen crosswinds in the last several years. We've seen concerning trends, but really on balance, I think this survey really sums up the type of sentiment or the type of experience that we're hearing from small business owners.
You did mention our own survey, Brian, and we'll just tease out that those results will be released this week. And so we can look to have kind of a further breakdown next week's briefing. All right, so there was a disappointing jobs report that came out last Friday, showed a decline of 92,000 jobs when some analysts had actually predicted a modest increase. So let's talk about the report. Were the losses concentrated in any particular industry?
Well, they were. This is one of the main points about this particular jobs report is that it was there really wasn't a lot of encouraging things in it to point to in terms of like certain industries did well and certain industries struggled. That's not to say they were all negative, but there weren't any real bright spots in it. The health and education line, which is one that's heavily intertwined with government, but separate from government jobs in the jobs report, was was negative 34,000. That was plus 129,000 in the previous period. Leisure and hospitality was down 27,000. Manufacturing was down 12,000. Construction down 11,000. Information technology down 11,000. Federal government, which is its own classification, down 10,000. And trade and transportation down 2,000. The retail was actually up about 2,000, which is basically, I mean, that's a huge line, and that basically even, but up 2,000. So they weren't all technically negative, but there really weren't any points to look at to say, wow, but this one's heading in a good direction. So the jobs report, I think, is adding to the expectation that we're just in a slower time. And as usual, as we had started talking about several months ago, the small businesses do tend to be the leading indicators of this. The sentiment that you pick up from small business owners eventually shows up in the top line government statistics, and this is yet again where that is true.
All right, let's move on to the marijuana industry here in Michigan. They've been struggling in recent years with dropping prices, but early reports so far in 2026 are also showing a significant drop in sales. So, Brian, is this, I think we know that this is related to the tax increase, but let's break this down a little bit further.
Yeah, this is a so this is an industry report, so it's not the government reports yet. And because this is an industry that's heavily regulated, there will be more official numbers that later come out. But it's the first indication of new 24% wholesale tax, what type of impact is it having coming in, having gone into effect on January 1st. And so the estimation here is that the monthly sales drop um, is about 15% over the same month in February 25 compared to February 24. I'm sorry, February 26 compared to February 25. And it's in an industry that has already been struggling with dropping prices. So you got this kind of double whammy hitting the industry, prices dropping and sales dropping. And it's probably not because people are utilizing marijuana less. Maybe there's some of that, but just remember there's a lot of ways to get marijuana. There's not aggressive prosecution of it. And so I think one of the things that the industry was concerned about, which probably will end up being true, is taxes at that level of 24% new tax in addition to what was already on it, which was not insignificant from the onset. How much does that really push to the informal or the black market in that industry? So it is it's well, it does kind of fit the overall direction of things that are happening in the economy, a bit more pronounced and a different factor at work here than what we see kind of in the broader jobs report in the Michigan Business Network's quarterly survey about general sales trends. This is one that the timing is such that it seems to be closely aligned with the new 24% tax.
All right, let's move on to healthcare. Blue Cross Blue Shield of Michigan released a net claims loss for 2025. So, can you kind of look under the hood at what those numbers really mean?
Yeah, this is a so in insurance, there's a they're highly regulated industries. They report in exactly when they have income and when they have losses and where they came from. There's a lot of information that you can find from it. And you might recall last year we talked about a this claims loss that Blue Cross had experienced, and also other major carriers did as well. What it means is that the claims that were made exceeded the amount of premiums that were paid. And you saw two things that were driving that. Um, Cost rising, particularly hospital and pharmaceutical costs. So the list price, if you will, or the price paid per service, but also utilization of those services went up. So you had those both things happening. The price went up and the utilization of it went up. And so you had this net claims loss of over $1 billion in the previous year. This year, there was still a net claims loss, but it was 246 million. That includes in there a lot of cost-cutting measures that they have taken, and we've covered those here as well. I know it's not always popular to defend insurance companies, although this one in particular, Blue Cross has taken several cost-cutting measures, both with their administrative expenses and also the way that the benefits design works. And you can see it in these numbers. So you look under the hood, you can see the difference that it made in the overall claims experience, but the cost increase pressures within the healthcare world are enormous still, and still very, very difficult to manage. So unfortunately, that does mean that uh, that claims loss does need to be made up. That's in the future. It'll be worked into future rates, and so there's not relief per se. Although because it's smaller, perhaps it won't be quite as difficult to absorb in the future. But it really is. it's an ongoing uh, it's an ongoing issue that is going to be difficult to solve with administrative changes. It's upstream from that, what is driving these claims losses. And I fully anticipate um, that while this is the largest insurer, that this experience will not be unique at all, that the cost of the claims and the amount collected in premiums will upside down again for most this year because of the rising costs and the rising utilization within the system. So a bit of a bright light, if you will, or a little off the taking the edge off a little bit with what we saw last year, but still concerning to see claims losses even with premiums increases as absorbed by the small business community over the last year.
All right, with that, let's take a look at this week's Data Monday report.
All right, so we've got just a handful of slides here for Data Monday, although as I go to share, it doesn't seem to be one of my options. It's interesting. All right, so I'm gonna. I don't know why it's not giving me an option to. Oh, now it's has appeared. Here we go. All right. So a couple of things we're going to look at. The first is on the top here, we're going to talk a little bit more about payroll, so you don't have to look at the top line. The bottom line, though, that you're seeing is the oil futures. It's just a snapshot. It's actually a little bit lower than this per barrel, but maybe just under $100 a barrel. But this is going to be an issue with respect to energy prices. And while there has been some movement away from fossil fuels with vehicles, there still is a lot of dependence around the globe. And when you disrupt the supply in one area, it has effects on everybody. So obviously, what's happening in Iran right now is impacting oil prices, but it's you can tell that the expectations are that it's not going to be a short disruption, and in that there's the risk of it kind of spreading to other sources. So you got one country that's a major producer now at war, but then how much will that impact the rest of the region's ability to move oil? That's why you see such a sharp spike here, a lot of unanswered questions. And if those questions get answered in a way where it seems like it's more limited in time frame and limited in terms of its scope of disruption, then you'll see this moderate. But if there aren't answers that come, then there's no reason to expect this to moderate. Okay, looking at there's two jobs reports that we're going to look at here today. The first one that we're seeing is the U.S. employment survey, which asks individuals, are you employed? There's one, the jobs report that we talked about just a minute ago is employers reporting their payrolls. But there's also a survey which asks people if they're employed. And we do see month over month negative numbers here. A lot of times this survey and the jobs report don't necessarily match up. Now they do. And it gives more confidence that the jobs market has weakened. But if you look at the official jobs report, you kind of generally see a trend. We started talking about this trend a couple of years ago because it just becomes, zoom out this many months, it becomes undeniable. But now you see very regularly negative numbers showing up, including the negative 92,000, which a lot of analysts expected it to be plus 40 to 50,000, which is nothing to write home about, but still different than a drop. So if you go back and look at asking individuals, it shows negative. You ask employers, it shows negative. Both of these surveys lining up, and pretty strong indication that the jobs market is very slow right now. The unemployment rate ticked up just a little bit in 4.4%. And then the labor force participation rate still staying fairly high. The the rate for the prime, what we're looking at here is 25 to 54-year olds. So what they call the prime labor force, and this is the one that's always the highest at just a whisper under 84%. So that part holding up. This is when you see this part of the jobs market or this part of the labor force not participating as much, that's when you know you really have problems. So I threw that one in there just as one kind of bright spot in an otherwise dismal report that the prime labor force is still holding up at the moment in terms of their overall employment, but the overall jobs market unquestionably weaker and with respect to energy costs, really there will be needs, there will be a need to have more answers uh, quickly for there to be any relief there. And that is not as high as they could get in terms of the energy costs. It definitely could get higher than what it is right now, but it could also turn around pretty quick too. It really, what you're seeing now in the market, we've seen it before, it hits like $100 a barrel. This is prime kind of uncertainty territory where the market's looking for signals, like what is going to happen here. And so it's one of these things that we've seen inflation numbers, that top line inflation um, has been pretty steady, but the top line inflation fuel costs are a big part of that. You know, we look at the core inflation where you take commodities out, but the headline number has commodities in. And you should absolutely expect that the consumer price index numbers next year are going, or next month are going to be higher. And it's because this is a big factor. And when you see this type of a sharp increase, it's unquestionably going to show up in the numbers.
All right, well, Brian, thanks for your insights on today's Data Monday. That is the whole show for today. We hope you have a wonderful week, and we will be back here next Monday at 3 o'clock.
Thanks, everybody. See you next week.